Let's start. Sorry about the past 2 weeks. I got a terrible case of the flu, and yeah, so I had to cancel 2 weeks. So very sorry about that. Yeah, I've sort of recovered mostly, but we have to finish this. So let's carry on. So today we will. I think also we tried to have some. We tried to have some we tried to have some like weekday lectures, but that also I think because of power cuts that didn't work out as well. um yeah, so today we will, as I said, we covered in this series, we covered the lectures pretty fast, and there are some that I left to the end from the earlier lectures, uh, to do based on time and relevance. So we will be doing one of those. Of course, there are certain elements of this which is required for your exams as well. Right. So today we will look at. Where is my lecture? Sorry. We will look at. So we looked at the main in when we talked about laws at the beginning. We looked at the main two laws that were governing payment systems. That is the Monetary Law and the Payments and Settlement Systems Act. But as you know, there are many other laws that affect payments, especially because it cuts across what we call a banking transaction. So banking transactions go through, most banking transactions go through payment systems. So there are a lot of laws that come into play. And with technology, we have new laws coming up and new regulations to regulate those areas. So I am, as I said in the previous lecture, even in digital currency, I'm just going to continue. I don't know whether power cuts are due today or not. Are you all aware if there are power cuts today? No. So anyway, we will just continue, and if you have any questions, you can ask like we generally do. Right. So what we learned so far was these two. So today we are going to look at this one, right? Other regulations, right? So all this. So we have the. I know that you all have had. Did you all cover these from your other legal environment course?
Yeah, Miss, we covered the Banking Act and everything.
You covered the Banking Act.
Yeah.
Only the Banking Act or the other acts as well?
No, there were some other acts as well.
Right, like
Bills
this.
of exchange and
Right.
so and so.
Okay, so we're just going to go. So the y'all can, y'all will already know these things. Then it's not a problem. We'll just go on a very high level how these work, and y'all can jump in. And if you want to add anything, if you want to have any questions, y'all can jump in and ask anything that you want. So we have, as you know, the Banking Act is there, and it is the act that establishes the licensing requirements for all commercial and specialized banks, right? And the idea of Banking Act is to provide the regulatory framework for banks, right? So so to ensure that banks run properly, and all the services that are related to them are also run properly, so that the system is stable, right? So that's very, very broadly what the Banking Act is. I'm sure you already know, since you have covered it in the legal environment. Now, with regards to our course, there are some regulations under the Banking Act which are important, right? So when we give fintech apps, payment apps, the ability to operate in Sri Lanka, the responsibility comes on the banks, right? Or the financial institutions, basically. So, under the Banking Act, we clearly have these guidelines there, and we sort of reflect the same guidelines for the non banks as well, right? So, the important thing is, so the structure goes as the banks are the ones that absorb the risk, right? So you have all the prudential requirements, you have all the safeguards to make sure that the banks don't fall, like the capital adequacy, the technological systems, all of that are there. So then whoever connects into the bank has to make sure that they are connecting to third parties that are safe. And all the apps and any other development that they do are safe, right? So one of these regulations that govern the technology area is the baseline security standard, right? So accordingly, now this applies to like the larger banks, not only payment systems, but to all the systems of the bank, right? Now, this was brought in 2014 and is implemented through FinCert, which used to be called uh, Bank CSERT. And then what is important here is that it focuses on enabling banks to provide a richer and secure online services to customers, right? So part of providing richer and online secure services to customers is to ensure that the systems are safe, right? And the more and more new systems that you connect to a larger to the core banking system, apps, or if you connect through APIs, you are creating more and more points of risk. So every time someone new connects to it and you give them some access, you are creating a point of risk, right? To the system. All these bugs can come. If that system is weak, it can affect the main system. So to make sure that these risks are minimized, this security standard was implemented. Just give me a sec. I need to- So, yeah. The baseline security standards are based on ISO 27000, which is the information security based standard, and the central bank supervises the compliance to the standard, right? So some of the key provisions in this include ensuring that there is preservation of confidentiality, integrity, and availability of information. And that's very important. When you have computerized systems, maintaining confidentiality or um, in like the risk of confidentiality being lost especially due to things like hacking or sharing, like just like sharing by mistake, right? Um, are very possible. It's like if you have something on paper, the paper is just where the paper is. But when you have a system, we all know this, it can be accessed from multiple places. So ensuring confidentiality of the information is really important. And integrity, right? Integrity is sort of the credibility of the system, right? And availability. So information must be available, right? If you try to access it and you can't access the data, then that's another problem as well. So these are the controls that this brings in, right? And it has to, sorry, this not complete, have to comply. Um, so this has to comply with all applicable laws. And so there are so many other laws. It very specifically says, okay, if you're doing this, it's not just, you can't just stick to what is said here, but there are so many other laws related to technological use of technology in banking, like computer crimes, electronic transactions, payment devices fraud act, IP Act, and now we have the Data Protection Act as well. So all these acts, you have to comply to them as well. Oh, sorry, a lot of spelling mistakes today. In order to recognize uh, as a for to enable to provide online banking services, organizations need to comply with internationally recognized security standards, right? Um, um, so. Then the information security management by the organization, it has to have a security policy as well, right? Um, then if there are third parties, the responsibility of ensuring the security and monitoring and reviewing the third parties also falls to the organization. Now, this is where the fintechs and third party apps, all of them come in. So the responsibility falls on the bank to ensure that they are complying to whatever security standards that the bank has fixed based on the baseline security standards, right? Um, Then another regulation that with the sort of the expansion of technology, we have recently more regulations coming to enable and govern technological provisions. So the uh, Bank Supervision Department issued this direction um, on the regulatory framework on technological risk management and resilience of licensed banks, right? So this provides the minimum technological requirements that they need to comply with, right? And it applies to all banks again, including operations conducted through agents and third-party service providers, right? So the bank cannot say things like, "Oh, it's a third-party guy; it's not my fault." You are responsible for all to ensuring that all of them comply to these standards, right? So a lot of you will find third-party service providers when they apply for tenders and all, they always say, oh, we are PCI DSS compliant or we are ISO, I don't know, 27,000, whatever, ISO, which whatever the requirement is compliant. And the third party providers, I think, work very hard to get those international certifications so that it's easier for the banks to assess their suitability to connect to a banking system, right? Now, in these laws, the responsibility falls on the board of directors, right? To make sure that adequate oversight is there and the frameworks are properly implemented, right? So while the central bank does supervise, the responsibility is directly on the board. and the bank has to come up with their governance framework, right? And in these acts, in these directions, it says that the bank has to also identify critical information systems. Now, sorry, did someone say anything? No. Now, critical information systems, we have a similar word um, in uh, the Payments and Settlement Systems Act, uh, which is systemically important systems, right? Now, here they have critical information systems, and critical information systems normally include transaction processing systems, general ledger systems, payment and settlement related systems, delivery channels, systems for money laundering, anti-money laundering, and KYC procedures, and any other system that is required for uninterrupted provision of banking services, right? So this is a very wide area that banks have to cover. So there is obviously very big investment involved as well. So banks, I think, spend a lot of money on compliance, and now with increased digitalization, there is a big I think burden on banks to make sure, so you can't just procure a system because it's fancy or something like that. It has to comply with all these requirements. So that's really very important. Um, and then you have another very important aspect, that is fair and ethical use of customer data, right? Uh, and it's very important. Can anyone tell me why it's important that we specify fair and ethical use of customer data in a regulatory framework for technological risk? Any ideas on why fair and ethical use of customer data needs to be emphasized? I will show you the. Here we are. So this is the direction, right? It's quite detailed, and in how to test and how to check if outsiders can manage it. It has you have to have a provision for a sorry, not a shared, a security operations center, um, which so that's sort of kind of like alerts to make sure if there's hacking or something involved, that's like an alert center. Mm, so, and that's also the bank's responsibility to ensure that. So here we go. All banks that are uh, DSI, DSIBs or other licensed specialized banks offering electronic delivery channels other than automated teller machines, including um, mobile apps, third-party apps, shall implement a SOC, right, a securities operation system as per the requirement. So if you are so basically, so if you have any electronic delivery channels, so which means all the banks get caught to this, right? Even though these are the sort of the very front end, right? Uh, so though even though this is automate other than automated teller machines, that is the very front end. So everything that falls behind that becomes electronic delivery channels, right? So therefore, basically, it's applicable to all, right? Um, So a lot on customer data encryption and protection of customer data, right? Why do we need to specify this? Now, y'all are bank customers as well. Mm, so why do you think it needs to be protected specifically? Under the Banking Act, there is another provision you all may have learned. It is the provision for confidentiality in the Banking Act. As bankers, you all must know this. It's something that you sign in when you join a bank. So you are bound by secrecy, right? When you join a bank, you are bound by secrecy of the information, customers' information as well. You can't share customers' information with people, with your friends or any, competitors or anything. You can't share it. You can't use it unless the customer has given consent to do that, and that must be according to the law. So for your personal use, you can't be moving customer information around. That is the requirement under the Banking Act, and that is reflected here. So the confidentiality, when you're doing it through a system, the system must maintain that confidentiality through encryption and other forms of safeguarding the customer information. Next, we have, so those are the two recent bank supervision directions, regulations on relating to technology, digital banking, digital payments. Then we have Bills of Exchange Ordinance, which you all have already studied, I think. So it relates to checks mainly, what we use under the what is applicable in our case in terms of payments. And so it has the provisions to present, accept, and dishonor these instruments. Now, in the PSSA, when we learned about the check imaging and truncation, it provides for electronic presentment, right? Uh, so provision related to presentment has been broadened to enable electronic presentment under the Payments and Settlement Systems Act, right? Um, so that the bank has to physically present the check is no longer there, but the customer still has to come and present the check to the bank. Um, then you have bills of regulations relating to government treasuries, which are also covered under the Payments and Settlement Systems Act because it has provisions for, so it's payments of funds and securities, right? So the security sections are covered by these two acts. Then we have the Foreign Exchange Act, which where especially when payment systems are connected to foreign payments, foreign transactions, especially card transactions, electronic fund transfer systems. So that's all the Foreign Exchange Act is. It covers all this. In this link, you can find all the relevant regulations. In last times lecture on digital currencies, we touched on the foreign exchange direction on using electronic fund transfer, or the inability to use electronic fund transfer systems for virtual currency transactions. So if you go into AML CFT, did you all do AML CFT in the legal environment? Mm, so AML CFT is like really fundamental for payment apps and fintech apps because this has been a bottleneck for innovation. Uh, uh, for a long time, compliance required physical verifications, right? So this was problematic for digital payments and innovations, right? Now, what uh, anti-money laundering and countering of terrorist financing regulations do is they cover international requirements set by the Financial Action Task Force, right? So these aren't local laws, right? Now, if you take bank supervision regulations or payments and settlement regulations, yes, we do comply with international standards like IBSL and all of that, but they are all sort of local regulations, right? We to ensure economic stability, right? But this one is not one of those. We get reviewed on our compliance by the FATF internationally, and that's why, like, few years ago, we were in the gray list, right? So, and then this can have very adverse repercussions on a country if you, especially small countries like us, when we get into the grey list because it upsets our sovereign ratings, banks' ratings as well, and then it's difficult to get loans. Then sometimes countries don't want to transact with us because then they are connected to transactions that might be connected to money laundering or terrorist financing. So therefore, sometimes in some countries you can't use your local cards, or sometimes when you go to buy from foreign websites, your card is not accepted, and many times these rules can be due to weak AML's CFT status of the country, right? So it's really important to ensure that we are we are considered as a compliant country, right? And because the costs are very high. Um, so, in that sense, there are a lot of processes that banks have to comply with, and the applicability is for a person or a business, right? So it covers everyone. It's not only personal, so even your corporate KYC is required, and then that gets really complicated. You have to check who the beneficial owners are. Now, a very interesting thing that you might recall are the Panama Papers, when suddenly we found that there were people who had uh, had wealth that couldn't be fully accounted for. And then, so the question arises: how did it get there, and what was the intent? And there have been many big busts on money laundering. There's a good course on AML CFT at the Center for Banking Studies. I think it just finished one of them. They have several of them. So if you haven't taken that course, I suggest you take that course. It's quite interesting. Um, but these are offenses, right? Money laundering and terrorist financing are offenses under the Act, right? Where you get a penalty or you could even go to jail. So, what are the offenses of money laundering? Directly or indirectly engages in, where a person or an institution directly or indirectly engages in transaction in relation to any property derived from unlawful activity or proceeds from an unlawful activity, right? Receives, possesses, conceals, etc., into, out of, invests in Sri Lanka. So always, right? It can go out, it can come in, whichever way it is. any property derived or realized from an unlawful activity, right? And then the other one is knowing or having reason to believe that such property is derived or realized from an unlawful activity or from the proceeds shall be guilty of the offense of money laundering. So even knowledge, if you already know that it is from an unlawful activity, then you're guilty of the offense of money laundering, right? Um, Now, when the banks get caught to this Financial Transaction Reporting Act, and banks and finance companies and stockbrokers, all of anywhere where money gets moved, and then there are people like designated non-finance business and professions as well, right? Lawyers, accountants. So everyone has a responsibility to make sure that they prevent money laundering and terrorist financing, right? And then you have to make reports, there's suspicious reports and then ongoing reports as well, to ensure. So these are some of the ways that they put thresholds so that you can, so that because there is a volume, value, practical operational thing as well. So if for every single rupee, if you go to report, then it becomes infeasible, right? Um, so one of the important things is know your customer. So you have to be able to identify your customer before opening an account, and then continuously monitor that customer's um, information and behavior, right? So when do you conduct customer due diligence? People in the front operations of the bank know this well. I think when you start the agreement with the customer mandate signing, and from that point onwards, you do your KYC, and then whenever you're providing transactions and they have stipulated amounts, right, 200,000, 100,000, whatever it is, there are stipulated amounts, and for any transactions above those, you have to uh, verify the identity, right? Or if you have a suspicion that this might be something that is for money laundering or terrorist financing. So most of the time, they look at patterns, like odd behaviors, and there are systems that um, capture these patterns as well now and make alerts, right? So, suspicious transaction of reporting, it has to be done to the FIU, and even attempted transactions, and anyone can report, right? So anyone, and that happens. Anyone, if people are suspicious that some odd activity is happening through something, people report, and that's good because that is very important. But tipping off the customer is prohibited, right? So we can't, the bank can't disclose the person um, to when if you're sort of, if they are under an SDR, right? You should not tell the customer we have made a SDR under you, right? Because that could tip off the customer to sort of stop doing whatever illegal activities, and it's difficult to then catch them. So there are FIU regulations that have recently been made relating to payment systems and fintechs, right? Um, so we have one that was released in 2021, which is the implementation of AML safety measures on parties involved in online payment platforms. Now, in that circular, what they have identified is the customers and merchants, because everyone can connect remotely. So these are the risks that come, right? I mean, we have been discussing the benefits a lot about having technology and the inconveniences that come about. But there are several risks involved as well, and AML CFT risk is one of those, especially anonymously people being able to connect, right? So the financial institutions of the respective online payment system has the responsibility. So under that circular, they say to ensure AML safety of all parties involved in such payment platforms, right? To ensure compliance with the acts. So that is the customers, the merchants, all of that, they have to implement systems to make sure that they are not random people, but KYC people that are using these systems, right? So when you start a payment app, it's kind of similar to opening a bank account. There's an onboarding process involved. So fine tuning that onboarding process correctly is very important because otherwise the customer could lose interest in using the app if the onboarding process is too, um, what can we say, is sort of too cumbersome, right? Mm. So then there was another that we've in 2021 again. That you may recall this one actually. This was creating a bit of a stir. Trends of foreign currency outflows via ATM. So people going abroad and then they use locally issued cards to withdraw money, right? And it's easier because you don't need to go to a bank and disclose your identity or anything like that, and you can just punch the card in and withdraw money, right? And this was a serious issue in 2021, and financial institutions may take and were told to take appropriate measures to cancel the electronic fund transfer cards issued by the reported accounts or any other account which will be identified in the future under the suspicion where the person who is conducting the transaction has not been identified as required, or where the transaction is carried out by an unauthorized and unidentified third party, right? So this was the issue that these both are. So this is basically when we are regulating, we have to look at the trends, we have to look at what is happening, and we have to issue relevant circulars. So uh, we can see some of them are related to, I mean, some of them are sort of obvious, like why wasn't this thought of? But you can't have foolproof systems, and banks have to figure out, they have a huge compliance burden. So in the sense, so they can't sort of correct for every single incident, and so where they miss out, they are specifically uh, captured through circulars like this. Um, and so now this is a very important one, which I will include in the, yeah, I plan to include this in this time's paper, which is non-face-to-face KYC, right? So this is actually a game changer for payment apps and fintechs uh, because this allows digital onboarding, right, all the time. So for instance, when I opened my payment app, started my payment app, there was physical KYC. So I had to physically uh, uh, present myself before a bank officer and verify my identity, right? So that becomes a cumbersome process because the customer can download the app, they can upload the ID from the app itself, but the verification of the ID and the identity could not be done digitally, even though the technology was available, right? So this guideline which came in 2020, this was after a lot of discussions. We worked with the Department of Registration of Persons and the FIU and the Payments and Settlement System, Payments and Settlements Department. We all got together and we discussed this, how can we get this done, because this was a serious problem that the banks were facing in for their sort of digital innovations, right? um, So in 2020, after much discussions with DRP is the Department of Registration of Persons, which issues the NICs. So they wanted this digitization process, and there was a lot of demand for online verifications of IDs, right? So part of the verification process is, as you all know, as bankers, is to check whether the ID is a fraudulent one or not. So that part, the Department of Registration made a development, and now I think you all already know this. Do you all use the online verification system at your banks? When a new customer comes to verify the ID, do you check the online system? No? No one? That's very interesting. Um, because most banks use this even for physical customers. Because you can check real time if the ID is available. Rangana, do you all not use the system?
Uh, you mean the online? What do you mean by online?
Online, where you can check from the Department of Registration of Persons, where you can check whether the ID is correct.
Mm, I'm not quite sure we are using online.
You all do this physical verification of the ID.
Yeah, that we do, but I don't think the tellers have the option to.
Okay,
Yeah,
right,
not
right.
sure.
Okay. Gavin at HSBC?
No, miss, I'm not aware either because
You're
I
in
don't know.
compliance, right?
I'm in compliance. Yeah.
Yeah,
I'm
the video KYC, not the video KYC because you all still don't have an app, right?
yeah.
Uh,
I'm actually under like anti-money laundering and stuff. So I
yeah.
don't.
So
Uh,
yeah, this is not KYC, is it?
yeah, not KYC.
Okay,
We can
right.
access like if it's like given in the system, like uploaded to the system, we can access. Other than that, no, we can't like specifically go to this thing and check.
So the what the system provides it is you can call for the record. Basically, in the DRP system, you can type in the ID number and you can call that record, and then you can see like most of them are the old IDs are like images, and if you have the new IDs, the format is I think slightly different. This Rajkarna. No, he's not supposed to. So yeah, so that a lot of banks use it. You all can find out how at which point your banks are using this for verification, or don't know whether they're using it for suspicious ones only. Um, then so the claimed identity information, right? So the guidelines are issued to financial institutions and insurers to facilitate verification of ID, verification against the original document when onboarding non-face-to-face, right? Individual customers using electronic interface provided by the Department of Registration of Persons, right? Um, so the claimed identity information may be obtained by the financial institution or the insurance institution in any manner that safeguards its integrity during the process of transmission, right? That means in the process of the information being transferred, you must know that it's not going to get sort of infiltrated and hacked, or that it's going to change, right? So the potential modes of obtaining information include but are not limited to electronic forms, mobile apps, video conferencing, secure email, kiosks, ATM, CDA machines where you have the PIN, etc., and registered post. So the all options, but the bank takes the risk, right? So the bank has to make sure that their option safeguards the integrity during the process of transmission. That's why you have registered post as opposed to normal post, right? And the existence of claimed identity, to ensure the existence of the claimed identity, FI may use electronic interface. So the first one is to check the person's identity, that it is there. Now the claimed identity. The other one is the interface published by the DRP to obtain to independently validate the customer's claimed identity, right? So where necessary, the technology quality and consent, etc., is not available if I must not use the face-to-face provisions, right? The non-face-to-face provision, sorry. So of course, there are inherent risks in these methods, and FIs have to take necessary steps to ensure information is up to date, right? So you have to, I think if you do non-face-to-face KYC, you have to do it every year or so to make sure that it is still the same person, right? So this is the guideline that has been adopted by payment fintechs, and already you have things like in NDB NEOS, they have video onboarding, right? And yeah, you can get the detailed link is over there. This is I copied straight from the this one. So, so then there is a so there is also a duty to disclose money laundering if you know that there is someone engaged in such activity, right? Next, we have the Electronic Transactions Act. Are there any questions so far? So, Electronic Transactions Act. Did you do Electronic Transactions Act in your legal environment? No. So, electronic transactions, first thing to remember is it is not about financial transactions only, right? Any electronic communications, right? So, facilitate formation of contracts, exchange of data messages, electronic documents, electronic records, any other communications in electronic form, right? It makes electronic communications valid, right? So that's the most important thing in electronic transactions. Yeah. So all transactions and business done in electronic forms would be recognized under the Act, right? So this is very crucial for the digitization process of the country and for digitization in banks. Of course, there has been a big complaint that banks are not using the the provisions of the Electronic Transactions Act sufficiently because it also provides for electronic signatures as well. So that because banks always ask for the wet signature under the Banking Act also, I think there's a requirement for the wet signature. So there have been a lot of complaints by the people who implemented the Electronic Transactions Act that the banking sector has been a bit behind. Of course, banks take their own compliance risks. Therefore, it's been a gradual process of them adopting electronic messaging, right? Um, then it's it recognizes data messages or what we discussed before, and in the so it sort of facilitates. So if you can use this in a court of law, right? So that is the important thing. Um, so those are the main acts. We finally come to the personal data protection, right? As you know, so these lectures are shorter because we like packed several lectures together in the previous times. So we will just finish this one, and next time will be our last lecture. So if you have any questions or anything particular that you want to discuss, we will discuss it next time. And I think Carlinga has also uploaded the past paper, the last time's past paper. And you can take a look at it as well. If there are any things that you want clarifications, we will do that. And yeah, so the final thing now, the Personal Data Protection Act was actually passed in Parliament, I think about 2 weeks ago, right? I think 2 weeks ago. Yeah. And so it was signed yesterday, like it was signed by the Speaker yesterday. So the main act will be published, I think, on Monday, with the government printer has to finalize it. So it's sort of hot off, like literally hot off the press. So I'm going to cover the details of the Data Protection Act. This is really important and it will affect all of you, right? It will affect all of you. It's a very everyone who's using, working with customers, holding customer data, dealing with customer data. So even your teller staff, everyone will get affected by the Data Protection Act. I will discuss this next time uh, based on the act itself, because the act is not released still. We were involved in some of the stages, but and the bill is available online, but in the parliament, in the committee stages, there were some amendments. So we need to wait for the final act to come, right? So we'll discuss it in detail next time. But today I will touch on the basic data protection principles that are relevant. Not so these are sort of international data protection principles, and so it's captured in our act as well, because our act was based on the GDPR, and GDPR was the first sort of comprehensive, not the first data protection law in the world, but the first comprehensive data protection principles that came, and it's kind of become like a global standard. So it's very important to know, right? So data protection, so the GDPR principles are based on lawful. So you can hold customer data if it is lawful, based on fairness and transparency. Then purpose limitations. You can't just hold data as and when you please, right? And data minimization. You must require, or you must hold the minimum amount of data, right? Data has to be accurate, right? And even storage also, you can't just invariably hold it forever. And integrity and confidentiality, again a term that was there in the 2014 baseline security standards, right? So it's an important concept, and accountability. So people who hold data and use process data are accountable for them, right? So what is lawfulness, transparency, and fairness? So identify valid grounds for collecting and using personal data. Do not process the data in a way that is unduly detrimental, unexpected, or misleading to the individuals concerned, right? Be clear, open, and honest about how the personal data is used and will be used, right? So purpose limitation. Be clear about the purposes for processing from the start, right? So once this act will come into operation in 1.5 years, So now itself, you all have to start adopting these systems and these principles into your work, right? It has to get integrated and you all have to get used to it. Only use personal data for a new purpose if either it is compatible with the original purpose and consent is obtained, or there is clear obligation set out in law, right? Unless the law has specified or the customer has consented, don't go and just take now. In the future, you can't just take blanket okays like I will do this, that, and everything, like, and people have to, when they're reading the mandate, they have to be aware and give their consent, right? Like right now, banks will do things and the customers, and then they will say, oh, it's in your mandate, you have signed it, right? You can't say that the customer has to be aware that they are consenting to this, for their data to be processed, right? So data minimization ensure personal data is being processed, the personal data is being processed is sufficient to properly fulfill the data, the stated purpose, has a rational link to that purpose, right? And is limited to what is necessary for that purpose, right? So you can't just have all sorts of data for the customer. It has to be related to the purpose, and it has to have a rational link, right? So you can't have data about what the customer, like for a loan, now we give a loan based on creditworthiness, right? We don't give a, so, and then in our loan agreement, we say the ARs and everyone else is liable, or you take collateral for that loan, right? Now you don't take things like health. Now you don't go to look, oh, will this person live long enough? You do, I mean, with age does come into a factor, but you don't take their like blood reports and things like that, because you are using the collateral method or the guarantee method to make sure that there is uh, ability to repay, right? So if you store health data, it might not have a rational link given the purpose, right? Because the way the model is to take collateral or the guarantee or to take the bank slips or something like that, right? You can't say, oh, this person is a heart patient or this person has high cholesterol, therefore I'm not going to give this person a loan, right? Then accuracy. Take all reasonable steps to ensure the personal data being held is not incorrect or misleading. So this is very important, especially for KYC, right? We have to make sure that the data is not incorrect. Personal data may need to be kept up to date depending on what it's used for, right? For CVV purposes, this will be relevant. Storage limitation. Do not keep personal data for longer than needed. Personal data can be kept for longer periods only for public interest, archiving, scientific and historical purposes and statistical purposes. Integrity and confidentiality, right? Appropriate security measures have to be in place to protect the personal data. Accountability, have appropriate measures and records to be able to demonstrate compliance with the above principles, right? So those are the main principles of data protection that generally covered in all laws, right? So the rights of data subjects, this is in the Act as well. So they can withdraw consent, then they have the right to access their data, rectify it, erase their data. We will discuss all of this next time. And procedures of exercising the rights through the controller or the authority. We will discuss these roles like controller, authority next time. And then there's a right to appeal, and there's the ability for the companies can do automated decision making, but customer has certain rights regarding this, right? So we will end here today. Are there any questions? No? Okay, so we will end here today. Right, thank you very much. Oh, I have sent this presentation to Kalinga to upload, but since we found some spelling mistakes, I'll upload the corrected. I'll send the corrected version to him. I don't know whether has it already been uploaded into the system. Did you see?
No, miss. I don't think it was
Okay,
uploaded.
so I'll send you the new version
Not yet.
then. Right. Thank you. Okay. Thanks a lot.
Okay. Miss, are you aware of when exactly we have the exam,
Oh
or
no,
not yet
I really don't
confirmed?
know. I don't know
You don't know,
because
right?
is it? I don't know. You will have to ask Kalinga. I'm not aware of that. I'm sorry.
Okay,
I
miss.
haven't
Thank
been
you.
asked to make a paper because we also obviously haven't finished the lectures. Yeah, I am not aware. Okay, right. Thanks a lot.